concern about the effects of a possible recession coming down the line. So we'll keep an eye on that dynamic. For more on the trading day ahead, let's bring in Keith Lerner, Truist Advisory Services Co-Chief Investment Officer. I wonder, Keith, if you are worried about a recession. It certainly seems like the riskiest bond investors do not worry that much.
Yeah, well, great to be with you, Dom. Listen, I still think there's risk of a notable slowdown as we think about over the next 6 to 12 months. However, I mean, I think it is pretty evident that the economy has been less interest rate sensitive than a lot of us had thought coming into the year. And one way to look at that is not only in the high yield market where credit spreads remain very well behaved, but also look at the average jobs that we've created this year has been about 300,000 as well. But as you think forward, we still have this lagged effect of Fed policy, and credit conditions are likely to become somewhat more tighter. But again, I think you're seeing the consumer that has still has this excess savings, and a lot of companies have termed out their debt. So I think that's kind of the upside surprise we've seen in the first half here.
Brings us to your word of the day, because you mentioned it in kind of a little bit of a concept. What is that word, and how does it refer to the economy?
Okay, Dom, the word of the day is resilient. And I would say that's for the overall economy and the markets, as we just mentioned. The S&P, as we close out the first half, up about 14%. The NASDAQ, the S&P technology sector up about 39%. Home builders up 39%. Who would have thought that, given how aggressive the Fed rate hike has been? And forward earning estimates for the S&P are at a 52-week high. So I think any way you slice it, at least for the first half, the market and the economy has been resilient.
Now, a lot of that resilience, you can say, is due to 2 or 3 sectors in particular. It's tech, it's comm services, and it's consumer discretionary. Does that momentum continue, or are valuations getting a little toppish?
One of the challenges, and I think it's hard to think there's going to be a huge amount of upside from here, is, as you mentioned, the S&P overall is trading close to a 19 multiple now. And as you mentioned, there's 3 sectors. There's only 3 sectors outperforming the S&P, which is the ones you just mentioned as well. So listen, I think, the way going forward, I still think the underlying trend you have to respect, this is up. I think you'll see much more moderation. And where we've been more focused recently is on the equal-weighted S&P, which is only up about 4 or 5% this year, and had one of its largest underperformance that we've seen in the last 30 or 40 years.
All right. Keith Lerner, before we let you go, your worst sector out there right now, just a few seconds.
We still are underweight financials, and we think it's going to be a challenging time given a slowdown in the economy and where rates are today.